Evolution AB Q2 report. Buybacks according to plan. Evolution delivered yet another soft quarter with the same looming problems that I've touched upon before. To avoid sounding like a broken clock, I will move through the numbers quickly before touching upon the most interesting developments for investors. Revenues were down 1.2%, which is disappointing. I'm as eager as everyone else to return to growth. On a positive side, the EBITDA margin is stable and strong at 65.9%. Sometimes it's useful to step back and see how incredible this company is. The margin has shown itself to be resilient even with low growth. It's easy to forget that a major bear case in evolution some years back was that the margin was unstable and that the laws of capitalism would catch up. The quarter saw continued volatility in Asia. The cybercrime problem is not easily dealt with, and the region fell 3.7% quarter on quarter. There's no development in this region, and I forecast no growth here in the short term. Europe showed progress with quarter on quarter growth of 3.5%. This is encouraging, but I'm reluctant to read into this development too much. In previous quarters, Europe has declined heavily, and it's reassuring that the region seems to have found somewhat of a bottom. We continue to see stable growth in LATAM and North America, and the stability indicates that the regions will continue to develop positively going forward. The regions will act as the growth engine for evolution, while Asia and Europe are the cash cows funding the buybacks. Speaking of buybacks, this is where the important stuff lies for investors. In my previous episode of Evolution, I highlighted that buybacks between 650 and 800 SEK per share would be much welcome. I don't want to see a share price move beyond this region. Since the episode, Evolution has hovered between 650 and 750 SEK per share. The company has bought virtually every share they are able to. More than 5% of the company has been bought back. This is equivalent to a dividend yielding 5%, but is worth more to shareholders due to the valuation and the tax efficiency. While Evolution is buying back stock, they generate free cash flow, which will also be deployed into future buybacks. Fast forward a year and the influence on earnings per share will be substantial. I'm very satisfied with the current developments. Lackluster growth in Asia and Europe keeps the market price low. Strong free cash flow is being deployed into record low valuation. When growth returns, I foresee a multiple expansion and the shareholder returns will be great. Lastly, we need to keep an eye out for the largest shareholder. I'm also very positive about the developments regarding Kenneth Dart. Firstly, he has passed the 30% threshold and submitted a mandatory bid. This does mean that he has the means to buy the company should the stock price be low enough. This serves as a floor for the stock. Secondly, the bid was lower than the market price, meaning that he doesn't really have intentions to buy Evolution outright. Now he can continue buying Evolution shares along with the buybacks. This can ensure buying pressure on the stock over time. Thirdly, Dart recently opened a position in Hacksaw. This is encouraging for me as an Evolution shareholder. Let me explain. The fact that Dart has interest in several companies in this sector shows that he finds the valuation and the sector interesting as a whole. I had concerns whether he wanted to take over Evolution in a hostile way by buying the entire company below intrinsic value. His movements in Flutter and Hacksaw indicates that he simply finds the sector to be undervalued. This gives me relief as an Evolution shareholder. He has the means and financing in order to buy Evolution if the stock price is low enough. Therefore, the risk for continued share decline has lessened. Meanwhile, the buybacks for 2025 and for 2026 should be able to be deployed at still attractive levels. The capital allocation is the most important thing for the stock in the short run, and hopefully all buybacks are made at attractive valuations. In the long run, I still believe in return to growth for Evolution as well as multiple expansion. This may take years, which I'm willing to wait for. Meanwhile, the shareholder yield at almost 10% is attractive, while the problems in Asia and Europe are being dealt with. Things are going according to plan. This is not financial advice. Thanks for listening.